So that wicked rotation that we were talking about yesterday is just beginning. They're getting out of the mega cap tax big time. We're going to talk about metaverse, going to be in double digits. Intel spins off Mobileye. And you know what Dennis and I get? Nothing. We got stocks going in opposite directions. This is a bizarro market, and we're going to talk about it. Mitch, roll the intro.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. We got a lot to talk about today, a lot of earnings, but let's get to the S&Ps for what good they are. They're down 4 1/4 at 36.75, just hovering above that low from yesterday. It's being defended even with Meta down almost 23%. Dollar's perking up a little bit. That's up 33 cents, 109.89. TLT flat at 96.53. Crude working its way back toward 90. It's up 76 cents at 88.68. Gold down 310. Nothing much going on there. 16.66. Silver down a dime. These currencies or these metals aren't moving. Bitcoin taking a breather after a nice rally, down 135 at 20,655. And Ethereum futures, they're down 16.50 at 15.45. So Triple D, I mean, I guess we got to start with Meta, down 30%, going to double digits. I probably already traded double digits. I haven't looked at the pre-market here. Is there a bottom in this thing, or is it just a value trap of value traps?
Well, first thing, I'll jump in here, and it looks like Dennis is a little busy. He'll be in here in a second. There he is. There he is.
Let's get that top left chart. Let's see that chart, Joel, because right now I'm seeing an intraday.
I
don't see a pre-market. Well, pre-market prep, we got to see pre-market charts. So I don't know. It looks like it's at 129. I was like, wow, Meta really rallied.
Man, that was a gap.
What a rally.
Who took it up? Who took it up to 140 and change?
The algos. The news
algos.
algos. They're just stupid. People who think you can't beat algos, man, you can beat them. Man. You can beat them pretty hard. The news algos, there's a lot of dumb ones. A lot of dumb money running algos now. So there's some really smart ones. Your high-frequency ones are all really smart. Those news algos, buying that on Meta, dumb money. 141 or 142, they take it to on the initial print. They're immediately down. That came down within about 30 seconds. Starts going red. There was no hope for that news algo to get out. Just buried. Lost probably hundreds of thousands of dollars, maybe millions of dollars on that trade. Not joking. Whoever was running that algo thinking it was going up. But look at it now.
Algo.
Dust settling.
Bid it up to take it down?
No, they don't bid it up to take it down. Do you know how much stock they bought up there, Joel?
It was
look how much stock was in that bracket. They literally run. So I know that, and it's impressive to be out. They're reading the numbers. They're reading the headlines. Mitch, give us the headlines. Let's explain this a little bit here. So I can't go in the pro. It wasn't working for me. Hopefully, they got it back up here now. So if your pro is not working, I think they got it working here now. It was a couple issues this morning. But yeah, bring it back up. I'm trying to get in the pro here too right now. Yeah, my pro is back. So
Meta
bring
platform,
it up, Mitch.
Class A common stock, Q3 EPS at $1.64, missing the $1.91 estimate. Sales at $27.71 billion, beating the $27.53 billion estimate. Meta says in the third quarter of 2022, ad impressions delivered across our family of apps increased 17% year over year, and the average price per ad decreased by 18% year over year.
So give us those top and bottom line numbers here once again, because the algos read that top and bottom line numbers. It's somebody running it. It's dumb if it's only reading that, but I'm telling you, there's somebody just running those top and bottom line numbers.
It was a miss on the EPS, $1.64, missing the $1.91 estimate. Sales at $27.71 billion, beating the
Revenue beat.
27.53 billion estimate. So sales beat, APS missed. But I don't know if that's really, is that really the way the algos work? Because there's sometimes where it's a beat and a beat, and then the stocks go down. So
it's on expectations. We have no way to know. And believe me, there's not just one news algo running out there. There's a bunch of them. So you don't know how they're programmed. You can kind of guess. I'm sure there's some simplistic ones that say beat, buy. I'm sure there's some more complicated one that have expectations in there. Well, the stock's been trending down, so we're not going to just do a beat, buy. I'm sure there's all a bunch. But whatever news algo was running there last night and buying on that print was dumb.
A lot of volume.
Dumb money. A lot of volume, Joel. A lot of volume.
I see
they lost a lot of money. Probably lost millions of dollars. It's probably a good estimate that they lost millions of dollars. Whoever bought that at 135, 136, 137. They bought a pile of stock up there. It traded up there for about 20, 30 seconds, and then she just tanked. And obviously, guidance, conference called in to help, but it's continued to leak. This story is just a mess. We've been absolutely right on this story. I bought the stock back, I think it was 6 months ago, not even. I think I bought it back. I was up in it for a while, about like 160 in the summertime, and it actually went to 180. And then, it just started leaking. I was like, I'm not going to let this winner become a loser. And I ended up selling I can see the day I actually sold. I think it was that September when we had that rally from 160 to 170, Joel. Okay. And I was like, I got like half the gain back because I bought at 160, went to 180, then it came back to 160. And I'm like, I just don't have a good feeling about this. It's been down here too long. I think I was talking about that on the show. It's just, and you talked about it too. We just hung out 160 too long.
Yep.
And then we got the little rally. I was like, you know what? I'm getting out of this. I think it's still like 166. I did actually make a little bit of money on it, but and this was in the long-term portfolio. But I just didn't like that, the 160. And then I started thinking about it. I'm like, man, the TikTok. I'm seeing what's happening with Snapchat. I'm like, their businesses are just, in trouble, the core businesses. And this metaverse dream is a long ways out. I'm like, I'm not sticking around just because, it's trading 14 or 15 times earnings here. There's lots of stocks trading 14 or 15 times earnings whose core businesses aren't under attack. So obviously it's been straight down since then. So I got out in time. We're $99 here now. I tweeted last night when it was 115. I said the road to $99.99. It was a very short road because I did not expect it to get it today. But it's now sub 100. It can be officially called the biggest value trap on the street. I mean, everybody, it seems like on CNBC, has bought the stock. There is some value here. This is not a zero. I will say that. Meta is not a zero. There is some value here. The core businesses are under attack, though. I don't know how you value it when, what I've seen happen to Snapchat. I'm seeing, the TikTok. Somebody was saying they're on Instagram last night, but they were just watching TikTok videos on Instagram. I go onto that Facebook over the weekend, which I was talking about on my trip to Montreal for the first time in forever. And I'm just bombarded with ads. I'm literally in my stream. I have in Zuckerberg. I hope you could listen to this because it's like the short-term gain of all these ad revenue is now equaling long-term pain because you've destroyed your stream with a bunch of ads. It's literally 2/3 ads. It's way over 50% ads. I mean, I see something I know, and then I see an ad. I see something I know, and then I see an ad. And I click on an alligator video, and then I got 1,000 alligator videos because I like alligators. I see there's this Chris guy from Gator Boys, and he wrestles the gators, and he's got a gator farm, and he's awesome. But anyway, so I click on one of those videos. I watch one of those videos there. I'm literally, my whole feed is just alligators now because I haven't clicked on anything else. So it just thinks like I'm an alligator lover because I clicked one alligator video. And the whole damn feed is just alligators now. It's a mess. The product, Facebook, is an absolute mess. I don't go on Instagram. I can't comment on Instagram. I know it's, a lot of users use it. But I will tell you right now, the Meta core products are a mess. And they're under attack from TikTok. So you got the dream of the metaverse. You do have some value here. But what if that ad revenue actually starts going down? Let's not talk about growing. Let's talk about it actually going down. Then that PE starts to go up. And this doesn't look as cheap. So I don't know if that's the case or not, but I don't know it's not the case. And that's why still for me, Meta is a no touch, even though it looks dirt cheap.
I can tell you that they definitely have been recommending this one on we won't call them out, but it's
even
been
Steve
months and
Grasso
months.
bought it. Mitch, Even Steve Grasso, but Grasso's been on fire. Love you, Steve Grasso. He's been on fire with his market calls. Actually, he struggled for a while there, but if you watch on Fast Money, he's been bearish this overall market for a while, and he's been right on a lot of stocks. They even suckered Grasso. Sorry, Grasso. He said it yesterday. He's like, I bought it before the print because I thought it was all priced in. And now, he's like, and I asked, what are you thinking now? And he's like, he's shaking his head. He's like, he's bag holding it.
They're
he's
not
down 30% in a day. It was 129 to 100. You're down 30% in a day. The entire thing is just bag holders. So this is just an absolute mess. It will have a bounce. There is some value, but is it going to bounce, from 95 to 99? I don't know. All I know is I don't want to invest in businesses that are under attack. So I'm going to say it's a no touch for now. Maybe on the watch list, if Zuckerberg can prove me something later on that he's turning it around, that my whole entire bloody stream isn't just advertising, maybe I'll get back in. But, one more thing, and then I'll let you guys go because I know I'm on like a 7-minute rant on Meta.
It's okay.
But this fallacy of it's all priced in is a fallacy. This market is the dumbest market that has ever existed. So much dumb money. Back to the interest rates. They told us in November of last year when the market was all-time highs, they were going to start tightening. We should have just liquidated everything back then, shorted the hell out of the market, and just killed it this year. If you're just listening and paying attention to the news, people say, oh, don't watch the news. What do you mean don't watch the news? It's the stupidest thing I've ever heard of, too. If you're listening to the Fed, you made a lot of money in 2022. If you're listening to the Fed, you're out of stocks because you wouldn't be fighting the Fed right now. So it's the stupidest thing. Oh, don't listen to the Fed, just look at charts. That's stupid. What you need to do is use everything. Use the technicals, but use the news as well. The news flow matters. These tape bombs absolutely matter. To Tommy Lackey's point, great term, tape bombs. This is a mess, this Meta, and I'm not touching it until I see some proof that the core businesses are going to start turning around. But it's not all priced in.
The
Nothing
straddle,
is ever all priced
the
in
straddle was $15, and I'm like, wow, that seems wide, and it's doubled with the 30-point down move. 96. I'm just gonna give one number on the downside, and 96.82. Let's call it 97. Let's go all the way back to February of 2016. Was a monthly low in 96.
6.5-year lows.
6.5-year low. You just got to, step down sellers. I don't know what happened at 4 a.m. If you woke up at 4 a.m. and you bought, you must have thought, oh boy, I'm getting a deal here. Had a little pop at 4 a.m. And we'll keep an eye on the pre-market low, but that's the next month. I keep saying this. I'm like, well, the next monthly low is this, and I'm not sure. I don't know if we're going to get there. And then we get there, 96.82. They've had problems. Apple's cut into their market, the ad market. It's a disaster. You're right. There's going to be a rally at some point, but as I said, I'll just stick with the 96.82. And we had 4 warnings. Look what Snap did, and look, Pins, and all these other social media stocks.
They're TikToked.
There's one thing.
Pins would be $10 lower if it wasn't for Elliott. Everybody's holding on for Elliott, and I'm actually, if you're holding on still for Elliott, I'd be nervous now. I think it's been too long up here, hanging out around 21, 22. I'd be nervous to be long Pinterest at this point in time. Things have just changed. This online advertising business, and it's not good for my Google stock. I do own Google. That obviously got hammered yesterday, so don't kid yourself. I'm not just killing it, making money everywhere. I'm not short Facebook. I wasn't short Snapchat, or I wasn't short Snap. I wasn't short Facebook. I call Facebook still Meta. I'm market neutral overall. I wasn't trying to make a call in the earnings and saying it's going to be bad. I try to call it on Twitter because it's kind of fun, but I still, and I still thought it was going down. But I'm not sitting here short Meta and just killing it. That's not my job. And my job is to make market calls for you guys, but my job is still to take advantage of market inefficiencies. And that's what people don't understand. They don't get that. Oh, you're a trader. You just make market calls. Market calls are fun, but it's not my bread and butter. I make my bread and butter by trading market inefficiencies, relationships, what is moving with each other. like Caterpillar Deer. I trade that.
Wow.
There's other relationships that are a little more exotic, and you just have to figure them out before the other
And
people
they
make
change.
money from it. And the
The
dynamic
way you
ones are
make
the
your
best.
most money is when they change.
You're right, Joel, because the algos are stupid and behind. They program the easy ones, but those exotic ones, they don't know what they're doing on those. We had just had ECB interest rate decision too, 8:15, so we rallied up a little bit here. I didn't see what it was. Canada didn't raise as much yesterday, though.
Let's go to some good news. And we got the bad news out of the way. There are some good earnings. We got to talk about this rotation because like yesterday when I posed that question to you, I posed it as, is this just like a 1-day thing, a 2-day thing, 3-day thing, or are we looking at a trend that's going to last years? We had that tech we were shoved down our throat for all these years, and now value stocks are coming back. Let's take a look. The cat's on the prowl here. Well over $200, Mitch. Why don't we go into some good earnings?
Where are we going? We're going Caterpillar. I'm
go
part
to
of
the
the
cat.
show. I can go. You guys remembered me?
We got to pick
about
Mitch up. Mitch, you're having a rough morning here. All right, Mitch, let's go.
All right, let's get
Come
to
on,
it.
Fire up.
Here we go. Caterpillar numbers. And this is a stock that, if you're watching stock market movers, you would have been able to been catching this move. Caterpillar Q3 EPS at $3.95, beating the $3.27 estimate. Sales at $15.0 billion, beating the $14.85 billion estimate. And definitely take a look at DE. It's been leading this area up, farming and heavy construction. Seems like Caterpillar is following.
Good report. Let's go to the cat. It's over 200. The 200 was a big level. Tried to get it yesterday. I don't have anything here on the monthlies because there's just a big old candle. Let's just see what happens at the pre-market high at 208, and then just go your half and whole numbers. It's a pretty big move for the cat. Dennis, I mean, it's hard to stand it. We're getting this rotation now. Stock is still well off its all-time high. I mean, it's got the momentum at its back now.
Yeah, I was long it into the report. I sold it already. I sold it just here at 206.5 or something, made $10. I didn't take it in size. I had it hedged out with Deer to a certain extent, so it wasn't a straight up trade, but it was pretty good.
210. Okay.
Yeah, it was pretty good. It's breaking out. I mean, this is, a stock that's sitting up here, breaking out through the 200. That's good news. The bad news is I just don't know if we're going to a recession. I got to think eventually equipment's going to get hit. But the Ford and GM earnings were fine, which started making me think, well, big equipment maybe still is selling. There's still stuff selling. It's still not a recession out there. So, but I was doing it more from a Paris perspective. It wasn't just a straight up call on
straight
this one.
Speculative. Okay.
Yeah, it wasn't a straight up speculative call. Like what did I have yesterday? I had one that was a straight up speculative call. I don't remember which one it was, or 2 days ago. Anyways, we were talking, but so sometimes I do take stocks through earnings. And sometimes I get stuck. Sometimes and stuck meaning I made an after hours trade thinking I could sneak out of it, and then it's like it's not going. Or not allowing me to get out where I want to get out. And I'm not going to eat it for like $2 ahead of the earnings because I think like it's a coin flip. And why would I eat it $2? Sometimes I go into stocks after hours if they're giving me a good enough lead that I think, okay, well, it's down $2. Stock is, probably going to have a $4 move. They're already giving me a 2-point lead. I'll jump into that and take the lead. Like BSX yesterday, there was another one. See, I'm trying to do some teaching. People say I don't teach anything, so I'm trying to teach stuff here. BSX, I was able to buy after hours last night or 2 nights ago for like $40, low 40s. It had closed like 41.5. I was like, they give me a $1.50 lead on Boston Scientific. I bet the whole expected move is a $1.50. And it ended up going up, but I sold like 42. So I actually ended up making on that. So there's different opportunities, but you've got to average. It's all risk reward. So I'm not afraid to go through earnings with something. I wouldn't load up, put my whole account in something like that, but anyways, we were taking it back, and I went, all over the place with that one. What stock were you originally talking about, Caterpillar?
We were talking about Cat. I do see. I threw the weekly up here, and we had a gap down. This was back in June, and you had a high at 209.87, and then you got the gap area there. So if you're holding out for a target on that on the upside, as Mitch mentioned, Deere has been leading the way, and Deere is broke
yeah.
out of that consolidation, trading up $8. Let's get to 400. We got
Yeah.
a weekly gap to fill. That must have been earnings or a mark. That might have been No, that was a while ago. If you want to look for a gap fill in this one, and you're looking for a little bit more, 401.61 would be a gap fill in Deere DE.
The value trade is what is driving these stocks because they're lower PE. Deere, Caterpillar has lower PEs. The one issue I have is that they've just come so far. It's like I'm not buying stocks up near all-time highs either, or our stocks trading like at 6-month highs. I just feel like eventually there's a huge rug pull on everything. But what you're really seeing right now, why there's so much strength in certain sectors, is you're seeing an unwinding of that mega cap
big
trade. You're
10-year
seeing an
trade.
unwinding. Everybody has been loaded with Apples and Microsofts and Googles and Facebooks. We'll call it Facebook forever. Sorry, Zuck. And Amazons are all loaded up in these same bloody stocks. 25% of the S&P. The money managers are all loaded up with these things. These things we're all trading with ridiculous valuations, which is why I sold my Microsoft, sold my Amazon. I started, obviously I hedged out my Apple. We talked about that. I still own Qs. Not selling my long-term Qs position because I just don't want to realize 1,000% gainer. And that's another reason, why in the long-term portfolio sometimes you don't, sell stuff because do I think the market's going down 90%? If I thought the market was going down 90%, I would sell those Qs. But I don't think that's the case. So I don't want to realize 1,000% gainer. But so I have indirect exposure, even to Meta still. I still have indirect exposure because it's SPY and the Qs own it. So I shouldn't say I'm not a Meta bag holder, indirectly for sure. But just going back, there's an unwinding of this mega cap trade that everybody is in. They've been in it for the last decade. It's what's made their portfolios for the last decade. Well, you know what? When Apple's trading 28 or 29 times earnings and Microsoft's trading 28 or 29 times earnings, it's time to ring the register. This has gone too far. They're too big. What do you think? They're going to keep growing? They're going to be $10 trillion companies? I mean, that's tough to do. So that's a little bit of victim of their size to a certain extent as well. I mean, look at Metaverse, and they're trying to figure it out and trying to go into other areas, and that's what you have to do when you're that big. But the bottom line is there's a lot of money managers all in the same trades. And what are they buying? They're buying the stuff that's underperformed for the last decade. I mean, the banks have really, not done much in the last decade. Really, you look at it. 2018, Bank of America was $32. It's $35 today. 5 years of no gains. In that same time period, Apple has went from $40 to $140. So there's still, a huge gain there. So, I mean, I just think you have a rebalancing happening here. And this value trade, which has been going on for the last 9 months, this isn't something that just started yesterday. It's been going on for 9 months just quietly. The value trade might continue. It's good for me and you, Joel, because we got a bunch of value stocks in our portfolio. But when the PEs of your stocks, they're going 30, 40, 50, it's time to start reallocating to cheaper stuff. That stuff just got too expensive. So banks are cheap. We talked about this yesterday. Drug stocks are cheap. Energy stock, the reallocation of that has been incredible because they were way too cheap. I missed that trade. But that was, another one too. There's a lot of stocks that are cheap. PEs matter all of a sudden. Fundamentals matter all of a sudden. It's not just about buying Apple or just hold, and long-term invest in Apple and that's it. The game has changed. The game has changed for us here in 2022. It's not just buy and eventually your stock comes back. Some of these stocks will never come back. So value investing right now is back in favor, and that might last a while.
You have to be nervous going in if you're holding Apple or Amazon into these reports. I mean, there's just the trend in these things in the mega cap tech. I mean, just every day, I just can't take. I mean, I'm looking at the top components here, and it's just like, all right, there's just it's going to be so interesting over the next couple days and the next couple weeks to see how these how things just start to change. I mean, what also, which is really caught a wicked bid. You want to talk about underperformers of underperformers? Okay, are you ready? And it's a tech stock. You know what it is?
Yeah.
The IBM.
There you go.
Look at IBM.
I mean, their value trade is back, and IBM, look at this. This value trade is for real right now, and maybe it's going to phase out. And we always, it seems to be the case, eventually value, starts to lose its luster and everybody jumps back to make caps.
Feels like it's different.
But maybe it's different this time. It's been going on for a long time. Did you know? And people, fun question. We talk about the tech bubble burst all the time back in 2000 and 2001. We just relived it. So the tech bubble has burst again. A lot of stocks are down 80, 90%. We just relived it. We predicted, I had, go back to my Twitter timeline, we were saying that this was very possible that we were experiencing in 2021, the next tech bubble, that, the history doesn't repeat itself, but sometimes rhymes. It completely repeated itself. Everybody got suckered in, PEs 50, 60, 70, 80. Oh, who cares? Sales. Let's buy something 20 times sales. It was the same thing back in 1999, 2000. But you know what happened after that? We talk about all those stocks were down 90%. Do you want to know what outperformed from 2002 till the financial crisis in 2008? Do you know what outperformed in those years? Value stocks, non-tech, for 7 years outperformed. If we just repeated the entire tech bubble burst. This value trade could last for years, folks. Years. We're giving you some good information here, and I think it's going to happen. I think the rising interest rate environment has turned people off of P's of 30, but P of 7 or 8 or 9 or 10, little dividend still. Well, I can make money if the rates are 5% if that's the case. This is a value trade. This move to drug stocks. This might be for real. I'd buy all value stocks on pullbacks, not on rallies. IBM just ride from 115 to 135. Don't chase. But it comes back down to 125. Maybe it's a buy. Gilead, the value stock of all value stocks. Look at the chart. We said it yesterday, 69. It's 71. There's some opportunities here. It's about longer-term cyclical rotation here right now, away from nosebleed valuations into the lower stuff. It's going to bounce around, and you're going to have different opportunities. But I think on pullbacks, value stocks are buys.
All right, let's Mitch, you want to keep the earning? Oh, what about Mickey D's here? I mean, holy mackerel. The old drive-through indicator. Once again, man. Backlines and Mickey D's.
Q3 EPS coming in here at $2.68, beating the $2.60 estimate. Sales at $5.87 billion, beating the $5.72 billion estimate. Global comparable sales were up 9.5% for the restaurant versus 5.8% consensus. Looks like segments showing positive growth during the quarter.
Big pop on this one. You might have 265.69. We've leaked $4 off that. Nice high right here at 265.79. I don't know. You could have missed your chance to sell Mickey D's higher, but nice move, nice report, up on a lot of volume. What's the PE on Mickey D's? I mean,
I'm guessing 17, 18. Mitch, you got that?
Yeah.
I'm guessing 17, 18. It might be over 20 because it's had a pretty good move now. It might be over 20 again.
Yeah, it's over 20, right? 24 I have.
Oh, it's high, but the one thing to consider is this is a staple. I'm not justifying it. I'm probably not buying it. If it's down in the teens, I'd buy it. But the one thing is they do have pricing power. To David's point in chat, it's a fantastic point. They have pricing power. Those drive-thrus are lined up and they're just passing it right along. And two, when I was in Montreal, I went, to the breakfast expectation, the $80 breakfast. And then the next day, I went across the road to McDonald's and ate breakfast with me and my wife for $19. So, I mean, when you're in a recession and people start getting tight for cash, McDonald's is cheap still. It's still relatively cheap. Maybe you were eating that breakfast for $14 or $15 last year, but now you're eating it for $18, $19. Doesn't feel like that.
GDP coming up, Trip.
Doesn't feel
GDP
oh my
coming
gosh.
up.
Trying to get out. Holy, too many rants. Okay.
GDP.
No orders out there. Do not. Algos aren't picking me off today. No picking off Denny today.
The algos are mad at you. They're listening, and you insulting them. They're coming after you today. But GDP print. So this is we're talking recession, non-recession. It looks like it's coming out. And did it already come out? No, we're coming up on it. Maybe 15 seconds. The algo They're liking it. They're liking it. We'll see what the actual number is. And
2.6 versus 2.4 expected.
boom, there you go. Look at that. Who cares about tech, man? This market is just, I mean, if it can't go down on days like this, with something with Facebook,
It's
look at
value
that.
bringing
We're
it
rallying.
back up, Joel.
Yep.
It's the value trade.
There you
That's
go.
all it is.
Pre-market highs 38.68, and we got a nice rally here. Going
But
in the
what does this
S&Ps.
show? This shows that the economy's still strong. Guess what? They're hiking rates. They're getting lost in the sauce. They got the
but it's
hopium
so
out
strong
there.
they just can't kill it, Mitch. No matter what they do, it's just so resilient.
Those are money managers just gonna get caught and torn apart here. They're trying to bet for the end of the year.
Mitch.
I'm kind of with Mitch here.
They're gonna get torn apart. They're gonna get torn apart.
I'm kind of with Mitch to a certain extent.
You know, rates are still low historically.
Yeah, they are.
They're about to not be.
Well, you're right. They're about to not be.
No, come on. We're like 4%. That's nothing. 20%. I mean, rates are still historically low.
You want to know the difference, though, Joel? You want to know the difference?
The rate of the increases.
And not only that, is that we have so much more debt. Because if you look back when interest rates in the 80s and people say, well, we were able to handle 20% interest rates back in the early 1980s. Why can't we handle 10% today? That's just foolish thinking as well. You want to know why? Because back in the 1980s, you had to have 25% down to buy a house. And your houses, you were buying, $50,000 houses, $30,000 houses, not $500,000 houses. People have been built on free money and cheap money. And that is unwinding as well. And that is why we have so much struggle to get a sustained bid. So overall, I still have to keep a lot of cash because I believe Mitch will be correct. And I believe it's going to still be a struggle for stocks to have a substantial rally, even though the economy is not getting hit here yet. Eventually, there will be a tipping point where people will just have not enough money to spend, and you'll start to see expenditures go down. Eventually, that tipping point will happen. I don't know when that happens, but eventually it probably has to happen if the Fed continues to raise rates. If they throw in the towel, like the UK or Australia, I think, is trying to throw in the towel. Canada only raised 50 basis points last week. They throw in the towel. Then we get the nice thing, okay, well, inflation's here forever. So it kind of sucks both ways. I think we just need to look at this market. There is pockets of where it's probably safe to be. I think value stocks are a safer place to be than growthy tech stocks. But I still think, to Mitch's point, which is a fantastic point, is you're still fighting the Fed if you're buying stocks here.
What about, one thing that, was very concerning about the economy, the U.S. was our debt. But what about, what's our debt situation now with like the stronger dollar and rising interest, right?
Not good.
The stronger dollar has helped decrease our debt.
Yeah, but I'm just saying overall with the rates too. Yeah. Like, what is the debt situation when all of a sudden you're at like 5% interest rates? I mean, there was nothing before, and obviously, the Fed's getting good rates. Like, we know it's going to be way below prime, but I mean, same time, that's servicing that debt has just gotten a lot more expensive too. How long can they keep rates up? And maybe it's the economy, maybe it's the stocks just calling the markets the Fed's bluff that eventually they have to throw in the towel because there's just too much debt, not just from the U.S. government, but from every U.S. citizen. There's a lot of things to think about here. There's a lot of balls to juggle. That's why it's such a difficult market to call. That's why, I'm not putting on any swing trades. I don't have hardly any swings on right now.
Tough.
All day trades and buying a little bit in the long-term investment account. I bought one more stock in the long-term investment account yesterday. And it was a stock that I'd sold higher. It was Bank of Nova Scotia in Canada. Buying a bank because all the banks have rallied substantially. Bank of Nova Scotia, BNS I'm talking about, has not rallied. It's got a 6.3% dividend.
Nice.
And I'm looking at saying rising interest rates actually doesn't hurt the banks. So I think there's a catch-up trade here. I was looking at other ones like TD has come up quite a bit. I'm looking at the Canadian ones. RY's come up. Maybe this, BNS is just, got, maybe, I don't know what their book, but maybe it's got some tougher book or something like that. But I played this before. I've sold the stock a lot higher. It's come back in. I'm getting exposure. But notice I'm not buying like Microsoft. I'm not buying like Apple. I'm buying like value. Bank of Nova Scotia, I think, it's got a P of like 8. Lower value, dividend 6.3%, which is, isn't as nice as it used to be, but it's not bad. So you can see the kind of stocks that I'm still picking on. It's value stocks.
I'm surprised these Canadian banks are not higher with the rapid appreciation in crude oil prices.
You'd think, actually, that's a good point too, Joel, because these banks have a lot of exposure, and especially Bank of Nova Scotia, because they're out west, they have a lot of exposure to energy companies. Energy companies are doing fine. Like we talked about a couple of years ago when energy was really in the gutter, the exposure the Bank of Nova Scotia had to some of these smaller energy companies could have some bad loans on the books. That's not a fear right now. I don't think bad loans are a fear anywhere right now. Maybe it's going to be a fear if we go into a deep recession, but that's not here yet. I kind of like the banks.
But I thought we were in a recession.
I thought we were too with the 2 GDP things, but right now it's telling me Joel goes to Florida and sees the economy, sees everybody just bustling. I go to Montreal and see busy everywhere. People still have money right now. I talked to my real estate agent. He's like, they're still buying houses. He's like, I don't know where the money's coming from. People are still buying houses. They've come down a bit, but he's like, interest rates went from, up, you could get a mortgage in Canada for 1.62%. 2 years ago.
Wow.
And now you're talking 5.5%. I think you'd be able to own a hell of a lot less house, but it hasn't really hit it yet. It's hit it a little bit. Housing prices are definitely down, but it hasn't hit hard yet. So I don't know when it's going to hit. But if the Fed keeps raising rates, eventually it hits.
One thing that helps, of course, the bulls is that initial jobless claims came in at 217,000, rising from the 214,000 prior. So at least 3,000 in the right direction, but that's a small number overall.
Lots to think about. Do we have a guest or Mark?
No,
Mark
had to bail on us today.
So unfortunately, you got to listen to more rant. I know that makes about 75% of the chat happy and 25% absolutely hate me. So
no, I hate
so as I keep talking, so maybe I should just go on mute for 20 minutes. You guys
can talk. Let's go to more value.
We try to please everyone, so we'll mute me for 15 minutes, and that'll please the 20.
What do you want to take a look at, Joel?
I want to go to more value. Comcast.
I do too.
Yeah.
Again, good call, Mitch.
Comcast. Let's take a look at the Comcast numbers.
Comcast. All right, I got you right now.
That's
I actually avoided this one today.
Comcast.
I haven't looked at Comcast in a while. I kind of missed this one. I got it right now. Just give me 2 seconds though.
Okay, yeah, I'll just give you the price action. This is a really big move for Comcast, up $2. I can't remember the last time this thing's been up $2. I see it snuck over 34. I'm kind of surprised it got that far into the 34 handle because that's just a big area. You had two highs right at 34 before the last breakdown. And then you had a quad of highs. Those are higher, 34.70 with all these highs right in this area. But, man, that's an awful big move for Comcast. I know they had pretty much good numbers across the board, right?
Definitely. Let's get to those number. EPS 96 cents, beating the 90-cent estimate. Sales at $29.85 billion, beating the $29.71 billion estimate. And it did declare a dividend.
One thing to consider is core businesses are under attack here. So that's still a consideration. But this stock has been cut in half.
Unbelievable.
And this is a low beta stock. It's been cut in half in a year. This is the biggest move probably Comcast has ever had, or one of the biggest moves. To be cut in half in a year on a low beta dividend type stock. I mean, we just gave back. It went from all-time highs and just gave back 5 years of gains in 1 year. So I just got done saying it's not all priced in, but there's definitely a lot of stuff priced in Comcast. They're priced for disaster. $30 was major support back in 2017. It's bouncing in that same area here again. So that's good news. Bad news is core business is still under attack, so I'm not touching it.
Okay. All right. Leaking. That's going down. It's way off that pre-market high now.
It's right back in.
You know what's funny, right? If you go to, I won't put them out there. I won't name them at least, but you'll see Dow's future jumping 300 points on better than expected GDP. Watch how that'll probably change in the next 10 minutes.
And it's, you know what I have been noticing now? Our ranges have been coming in. which is good.
That's a good
I
thing.
mean,
I agree,
yeah,
Joel.
and that's
Yeah,
I mean,
sideways
why we
action.
went from 97, like great call yesterday, Dennis, and I about the market going green.
Yeah.
It went green by like 25 handles,
Yeah,
and then
didn't expect it.
I
And
stepped
then they pulled the
away
rug out,
for an hour, and I come back and I'm like, like, wow, am I looking at the same market? So man, there was a big push yesterday. We're winding up here. I mean, maybe get an inside day today. I don't know. Yesterday's low was 24 and a quarter. I'll tell you, if we can hold yesterday's low, I'm not talking about the Globex low, and close, right in this area, it should be an interesting Friday. It's not the last day of the month. The last day of the month is going to be Halloween, right, on the 31st. Dennis, did you kids pick up some costumes? Are they going to be feeling okay? Go do some trick or treating?
Well, I saw that costume that I tweeted out yesterday, and did you see the costume that I tweeted out? You should show my tweets, Mitch. Actually, it'd be good for a laugh.
I got you. I'll pull it up.
Somebody posted this up there, and I want to talk about not the day trader one, but the Nancy Pelosi one. So it was a costume. I shouldn't ruin it, so just bring it up here. Mitch is going to bring it up. So I think my kids should go as this. They could go as a day trader, but they could also go as the Nancy Pelosi costume. Let's bring it up here. Mitch is finding
Let's see it.
I brought. He's still looking. He's still looking.
I think it's this one.
Up on this.
Yeah, I got you right here.
I can see Mitch smiling.
Yeah.
Is it this?
The Nancy Pelosi. Well, that one's good too. So then go scroll further down. That one's kind of funny too. The day trader with the costumes. But go further down. Andre the Giant. Look at my Twitter feed. Look at this one.
Oh, there you go. The Pelosi.
Look at this one. Click that thing.
And guess what? You're probably investing in NVIDIA,
I don't know
right?
who did that. That is awesome.
Buying stocks. This is what I'm going to wear to the New York Stock Exchange next time, guys. Don't worry about it.
Seriously. I think my kids, I think I'll have my daughter go as Nancy Pelosi. She's going as a stock trader. Yeah, she has the ability
Possible
to
insider information.
Doesn't come with a $180 million net worth, though.
Not included. Not included. Batteries sold separately.
Yeah. That's good. Whoever did that, genius. That is awesome. So I think that's going to be the costume for my girl.
Dennis, you got a Michigan shirt on there?
Yeah, for you, Joel.
Boy, that's from the rich right here.
Joel loves me today. He loves me today.
Just a quick programming note. What I'm hoping to do tomorrow, getting out of the house and going up to Ann Arbor, Michigan. And they have a trading floor there at the Tazi trading floor at the Ross Business School. I've been in contact with some of the professors over there. And if I could get all the connectivity, I'm going to go up there today. I'm going to try and do. I'm going to be on the trading floor, Dennis. I don't know if people are going to be yelling.
This today?
Well, I'm going to go up. I'm going to try to do at the close show from there today.
Oh, you're going to do live broadcast?
Yeah, I'm going to do the live broadcast. Nice. If we could get through all the firewalls there, I'm a little bit nervous, but Mitch and Aaron have shown me. But we're going to make that into a real trading floor. We're going to get the pencils out and I'm going to throw trading cards like I used to do from the side of the pit. So, little different. So we're hopefully going to do at the close from there tomorrow. And then I got to get up super early tomorrow and head up. So going to be in Ann Arbor, Michigan. And that's one day, big game, Michigan and Michigan State on Saturday. But I know you guys don't want to talk sports, but what about chip stocks, Dennis? What you mentioned, AMD and NVIDIA. I mean, are these things? I mean, we're talking about the tech wreck. They've had their wreck too. Is there some value here?
Yeah, I think there is. I think there is. I bought some AMD in the long-term portfolio. I actually got out. I should have sold it all. I kept one little piece. I kept 1/5 of the 20% of the position. I sold 80% of the position at $100. I wish I would have sold it all. I rebought some of it. I'm not a full-size position here yet, but I rebought some of it at 56. There just last week. It's been hanging around here. I feel like these have been beat up enough. They're not cheap yet, but chips are still not going away. You're going to need chips. So I think, and I might be wrong. Obviously, I'm a contrarian investor a lot of times. So, you'll see charts and be like, why is he buying that? I've always been a momentum trader, but I'm kind of a contrarian investor. I buy when everybody hates it. Meta, not the thing, because core business under attack. I don't think AMD's core businesses are under attack. So I don't think NVIDIA's core businesses are under attack. And they're really oversold. I mean, AMD just got cut in half in 2 months. So is this a shot? Yeah, I'm nibbling in. The chips are strong today. And I don't know the news here. They were strong right after the bell. It's probably rotation almost within the index, but there has to be some news. NVIDIA's up $6. AMD's trading up $2. I bought Marvell too. I think I said that the other day. I bought Marvell around 38.
Wow.
I think it was. So I'm starting to just nibble into some chip exposure. I'm back. Basically, what I'm doing in my long-term portfolio is rebuying all the stocks I sold. So I'm trying to get back in. I'm back in to the Bank of Nova Scotia, which I sold a lot higher. Back into the AMD, which I sold a lot higher. Back into Marvell, which I sold a lot higher. I'm scalping myself back into some of these trades.
That's
just
an
in
interesting
case.
trade.
So I'm actually, I'm getting some exposure here. But again, I've been buying stocks that the valuations aren't crazy now. Chips on dips. I like that, Lynn. Chips on dips.
I don't know, man. I'm still worried about what's
scared
going
of
on in
everything.
China. Yeah. I'm scared of the sun right now.
I'm not going all in. I'll tell you that much, Mitch. Not all in here. This is not the all in market. But the one thing is, I've got to respect the tape. And the tape has been the tape bombs have been pretty damn bad, and the S&Ps are holding up. So that makes me scared to just stay like 100% cash. It makes me scared to stay 55% cash. I'm down like 32% cash. So I'm
really
lower than I was. And obviously in your long-term investing account, probably you want to be about 10 to 12% cash longer term. So it needs to come in more yet. But I'm starting to buy some exposure. I'm starting to buy some stocks. But the stuff I'm picking on is, lower PE. And we can fall farther. And Take Two is another one too. I'm just reading the chat. Chat's great today, by the way. Take Two has.
Are they behaving? I haven't been watching.
They've held up actually. I mean, I sold it, and then it got sold off, but I didn't re-get it. I wish I would have re-got it the lower of September. I did buy EA. I'm up in that one. I bought that, but Take Two I'd like to get back as well. Again, it's not cheap though. These aren't stocks you have to hurry into. Like Bank of Nova Scotia is just cheap. I mean, and the core business I don't believe is under attack. So that's a different type of investment. But I don't know. I think some of these chips, maybe they've come down enough where it's time to start nibbling. Not all in, but it's time to take some nibbles.
What about, and this has been part of the tech wreck too, but, what about, we're getting some questions here about Shopify.
Oh, gosh.
All right.
I can't touch it because the multiple's just insane.
Too high still?
The only one I did buy was Unity, and I'm kind of like, I don't even know if I want it. It's kind of basically where I bought it. I bought on the 29 handle. Had a pretty good morning. It was like, oh, it's going, but then it's like, I don't know why I've had a love. I think it's from Michael Pachter, and I like Michael Pachter so much, and he was on our show, and it was a hell of a lot higher when he liked Unity. And I'm like, well, it's way lower than that. I'm like, is this, eventually a takeout candidate for one of the bigger guns? I don't know. It doesn't make money, though. It's the only thing I got that's kind of like, that I just recently bought that I'm like, I don't have a great feeling about this. Like stocks that I've bought in the last week and a half in the long-term account, there's quite a few of them. I bought Marvell. I've had that before. I've got a good feel for what that is. AMD, I've bought that before. I got a good feel. Bank of Nova Scotia is a value trade. OGN I bought, which is a drug stock. It was an old spinoff, I believe, of Merck. It's a value trade all the way. It's P.
OGN.
It's probably like 6. The P on OGN is just dirt cheap. It's a drug stock that I think has just been forgotten. So Kramer picked too. Kramer likes this one too. So
let's go Merck. Let's go Merck.
You want to talk Merck?
Yeah.
We're going to talk Shop. And then
all right, Shop.
Merck.
Okay.
The reason I can't buy Shop is it's
still too high.
Valuation.
All right. EPS came in here at a loss of 2 cents, beating the loss of 10-cent estimate. Sales of 1.4 billion, missing the 1.83 billion estimate.
Gosh.
That's on Shopify.
I can't do it.
You can't do it?
I'd love to be able to buy Shopify. I think the company is very well run. I think the company is still going to be a huge player. I just think the valuation, I'm like, I just cannot do it. I mean, I don't know what this was ever doing, trading $176. If this thing came down like $10, maybe. I've said it before, even when it was coming down before the pro split, if it ever came down to 500. We're just in a different market now, though. You just cannot pay, and I don't even know, do they even make money? Are they making money, Shopify? They're not even making money, are they?
Well, they lost on the EPS.
Yeah, they're not even making money. When stocks aren't making money, it's so tough. Oh, I love the company. I hate the valuation. So I just got to stay away for now.
I think you got to wait till you see the story change, right? The environment
I think
change.
so.
Then you can go for it. But
I think so. I think it's a good call, Mitch.
Pandemic stock, right? All right, let's go to Merck. Triple digits for the Merck stock.
EPS here at $1.85, beating the $1.75 estimate. Wow. Sales at $14.96 billion, beating the $14.07 billion estimate. Merck posted Q3 beat as Keytruda offset sales impacting on the COVID-19 pill. Whatever happened to that COVID-19 pill? I don't hear about it no more.
That good. I don't know if it was that good, to be honest, but COVID's over. We don't worry about COVID now. It's there. It's here forever. It's not over. It's just everywhere. It's the flu now, and you can't stop it. So I've given up trying to avoid people. Somebody's got COVID. I was like, oh, well, I had it 6 weeks ago. Kind of sucked. I had a really rough.
How you feeling? Are you 100%?
Yeah, I think I'm back. I think I'm fine.
Yeah.
So it was rough. I had a rough week. It was not.
I remember.
It was not
that.
Fun.
No.
It was not fun. But
someone's asking if I'm not selling my Merck. It's in the long term. Never.
What's the PE on that thing? Al's asking. What is it? 8, 9, 10?
Really?
Maybe it's 12. It's low. It's run a bit, so it's probably higher than it was. I bet it's under 15 for sure.
I got forward look 13, PE at 15.
13. It was 15, 10. 13. When it was down there. 10, 12, 13. Stocks, these are just cheap.
101.
Cheap stocks are winning, and people were saying to me earlier when I was saying this value stocks, and they were saying last week, well, you were saying, why would you buy these stocks with these 2.75% dividends in a cash when you get 4.5 or 5%? Well, that's why I wouldn't buy utilities, because they're trading 20, 25 times earnings. I wouldn't buy these staples trading 20, 25 times earnings. Would I buy Gilead at 6 or 7 times earnings? That's a different story all of a sudden. Yeah, it's a 4.11% dividend, but these drug companies still have, potential for other drugs. I mean, look at Lilly. Look at Biogen. I mean, what's the P on Biogen? And you got potential for this Alzheimer's drug here, and that stock's looking like it's going to break out again. I'm long Biogen. I'm not long Gilead. I'm long Merck.
Oh, look at that! Right back.
I'm long a lot of drugs. I'm long Pfizer.
Yep.
I don't know.
Pfizer, Merck. Yep.
What's the PE on Biogen now, Mitch? It's come way up, 200. And I don't like chasing stocks, and I'm already in this, so I'm not buying more. But I mean, it looks like it's trying to break out here again. I think
it held that gap.
Cheap. Where is the PE on Biogen? 18. But you got this Alzheimer's drug. It looks like it's going to get approved. I mean, this is going to be a huge moneymaker for them. And Lilly is pricing like theirs is going to get approved too, obviously. And that thing just keeps blasting off to new all-time highs. Bristol Myers reported earnings there a couple days ago. It's time to come back. The drugs are on fire. This market's on drugs still.
Goldman Sachs had upgraded that Biogen with a 370 price target. Morgan Stanley upgraded them also and raised their price target to 325. So they're in the 300s. They feel, of course, if that gets approved, it can still run here.
It's Plan B NL has asked me this question a couple of times. I'm just going to read it from the chat. I want to address it about the value trade. 1 week ago, he said, why would I own a value dividend stock with a 3% dividend yield when you can own treasury bills for 4 to 5%? There is a thought process there, but the difference is they just want to buy stocks right now. I want to separate it though. I don't want to own value stocks. We need to take I don't want to own a utility stock that's got a P of 25 because it's not a value stock. I don't want to own. So if I said value stock before, maybe because I'm just grouping it in, but I think we got to separate that. When you're doing a live radio show, sometimes you blurt something out that you're not saying exactly clear. I don't want to own utilities at 20 times earnings, plus some 25, some 28. I don't want to own consumer staples at 25 times earnings here because those earnings are worth less. I'm willing to own stocks that are trading at P's of 7 and 8 and 10 and 12 in a rising interest rate environment because there's more value there. Those staples and utilities are not value stocks. They're dividend plays, pure dividend plays, and those dividends aren't worth as much. So I think we need to separate it out and look at PEs. If I could wear a shirt that wasn't Michigan, I would buy a shirt that said PEs are cool again, and they are. So look at what it is. I mean, this has been the market of 2022. PE does matter. Lower PE stocks have held up very well. Higher PE stocks have been murdered. I think the trade could continue because I went through 2003 and 2004 and 2005 and 2006 and 2007 and up till 2008 when everything fell apart because of the financial crisis. But for 5 years in there, after the tech bubble burst, it was value and low PE stocks that outperformed. And I think that happens again.
Okay. Well, I got a question for you then. If you're looking for those low PEs, what do you think about Ford? Let's talk about it.
That's tough. And yeah, give us the numbers. It's great.
Exactly.
Great segue. Go, Mitch.
So EPS coming in here at 30 cents, missing the 32 cent estimate. Automotive sales at 37.19 billion, beating the 36.0 billion estimate. Total sales at 39.4 billion. What do you think about Ford?
Just not recession proof at all, though. Like drugs are recession proof. So meaning you're still going to get your drugs even if you're in a recession. You're going to find the money to buy your drugs when you're in a recession. Ford, GM are higher ticket price or automotives. You're buying a car. I mean, I've been saying for a while, I think eventually the recession hits these stocks. So there's, you've got to analyze each company on an individual basis, but don't kid yourself. Ford and GM stocks are rallying right now because they are lower PEs. That is what is carrying them higher here right now. So there is that trade pushing this higher right now. The reason I don't want to chase these ones is that I feel like they eventually get hit because I don't think people are going to be buying as many cars 6 months from now because I think they're going to have less money.
1250. It kind of had matching ranges yesterday in Ford. There's the big seller at 13, so that's your roadblock. Nice round number like that. They let it get up a little bit above 13 yesterday, and they slammed it. 1303, 1306, still 13 seller to me. And then on the downside, you got matching lows here at 1250. So I think if the bulls can defend that, maybe run back up. After that, you follow the 1218. This is the quarter that they warned about too, right? And I think the part of the loss was they took a write down. I think they closed out their self-driving unit division. Mitch, do you see that anywhere?
I'll look it up
in the
right
news.
now.
I think that was part reason for part of the loss was
it looks like they wrote off the Argo AI investment. So looks like there was an investment that they did write off there. Looking into it a little bit more now.
He's giving you a good segue here, Mitch.
A 2.7 billion hit on the write-off.
He's giving you a good segue here, Mitch. Talking about autonomous driving.
Yeah, of course. Mobileye. Why don't we talk about
it?
Let's get to it. Shares of Intel's Mobileye shot up 38% following the market debut Wednesday. Of course, the self-driving technology unit pricing its initial public offering slightly above its previously stated range at garnered a market valuation of nearly 17 billion.
Nice move yesterday, Joel. Didn't you like seeing your Mobileye shares in your account just fly like that from your Intel spinoff? Didn't that just make you feel awesome? And
how did they get away with that?
The reason I'm saying this is Intel spins off Mobileye. I bought Intel stock a little bit of the reason, and I just bought it at $33, so I'm bag holding this thing. A little bit of the reason, it was lower PE, but that they have the Mobileye. Then they spin the thing off and don't give me anything. I don't get any shares. I don't get a special dividend. I don't get anything. What the hell? I mean, so what they're saying, because I had to research this, I'm like, how in the hell do you spin a stock off and not give the shareholders anything? It's like, well, you still own your Mobileye shares through Intel. They only sold just, a little piece of it. So Intel still owns a majority of this company. So you indirectly still own Mobileye. That sucks. I don't want to see Mobileye go up 28% yesterday and Intel goes up nothing. Intel went up nothing yesterday. Mobileye goes up 20%, from where it was. I don't get any shares. This company just sucks. Like, what are you doing? You've got this Mobileye asset and you don't even give your shareholders anything. And then you tell them, oh yeah, but you still own it indirectly, because Intel still owns all those shares. So you're still participating. I think that's bogus. If you spin something off, I want the bloody shares. Give the shares to us. So this is just ridiculous. So I think it sets up for a class action lawsuit, to be honest with you. So I'm pissed right off on this.
Are you holding back, Dennis?
You have Intel shares. Joel, you should be pissed off.
I know. Believe
class
me,
action
I know.
lawsuit.
I know.
Lawyers out there, listen to this one. Class action lawsuit. Mobileye shares, and they're going to say, well, you still indirectly own it. You still have the shares. You still
then why
indirectly own it. I want to directly own it. It's trading on the exchange. I want to be able to trade my shares. So you're handcuffing me. So meaning I can't do anything unless I sell my Intel stock, and then I don't own it anymore. But Mobileye goes up that much yesterday, and Intel goes up nothing. This sucks. That is just brutal. Brutal that they spin something off and don't give it to the shareholders.
Someone was asking about it. Really not much technicals to give, only 1 day of trading. Opened above the well above the projected range. I would just, now that it's down a little bit, I just, you got your all-time high, your all-time low, but that closing price, keep an eye on that today. You are trading in the red a little bit. 28.97. So just, track the close over the next couple days. You can't really say if there's size. Traded pretty good volume yesterday. But see what happens. See if you get, if you can't get back up to that closing price of 28.97, you might give a little bit of that move back. So really, that's the only thing that I'm keeping a close eye on. That 9:00 hour here. So I'm going to bolt in just a second. I mean, there's a bid here in the S&Ps, Dennis. I mean,
you have to respect it.
Yeah.
There's one thing I want to say. I'm buying value stocks on pullbacks here. I've got to get exposure because I have to respect the tape. The tape is getting tape bombs and not going down. So I have to respect that. Maybe it pulls the rug and maybe it all goes down in a blaze of glory here once again. But those value stocks are going to go down less than those growth stocks if that happens, in my opinion. So I'm positioning myself. More value is already value. I'm even getting more value, and maybe I'm getting too much on the value train, and it's all going to fly back into Apple and Microsoft and Meta. I'm going to miss the boat.
Apple tonight, I tell you, just the way the big tech is, the way big tech's been performing, you gotta be nervous about that report for Apple and Amazon too. Yep. But Mitch, I'll let you guys finish up here. Great show, Triple D. I enjoyed the rants, and we'll talk to you guys later on.
All right, getting Joel out of here. Now, one thing I will say about Mobileye is I haven't seen any IPOs lately do really well. So
that one did pretty good. I would have liked to have participated.
I mean, day one, a lot of them did well, right? You can look at Coin, you can look at Hood. They did well for like the first week, and then it was just a tank down. So I think the valuation is a little bit excessive there, 17 billion. But hey, to each his own. I would have
liked to have been able to sell it without, having this indirect ownership. I want direct ownership.
Yeah, right.
Get a little company and it's trading publicly. And you owned it. I want to be able to participate directly on that. I don't like this indirect ownership stuff. So that's why I'm ticked off. I realize that some people are saying, oh, you still own it. I said that clearly in the rant 3 minutes ago that I know I own it indirectly. I want to own it directly. Spinning it off, I see the shares trading directly in my on my trading screen, and Intel owned it all. I want to own those shares directly. I don't want to own them indirectly. This spinoff sucks.
Well, there's one thing I can definitely say for the chat is that if you thought Triple D holds back, I don't know what show you're watching because my man tries to tell it how it is. I appreciate you, Triple D, like always. You go ahead and get towards your
Lots
trading.
Of rants.
Go kill it, man. Do what you do best.
See you, Money Mitch.
All right, there's Dennis out of here, and I will get you guys over to live trading action, and I will let you guys know we're going to be doing kind of a continuous stream here from live trading into Benzinga Live and then stock market movers. So stay tuned. Come join us. We'll just be starting this right now about 9:05. We got about 2 minutes till we get to there. Markets are bouncing. We're going to do a little live trading action and then see what happens today. I mean, a lot going on. Markets are still holding right now. We'll see if we can actually get green on this GDP number. And definitely hit the thumbs up on your way out. This is Pre-Market Prep, and I'll see you in a little bit right there on live trading. Come over to Benzinga TV. Stick in right here on Benzinga and hit the subscribe button while you're at it.